Yo, what's good, y'all? Welcome back to another brand new trade recap. And in today's video, I'm going over the exact strategy that I utilized to catch 6 award trading NQ during New York session. Let's get straight into it. So, like I always say, always start on the higher time frames. So that's exactly what we're gonna do in today's video. I'm actually gonna go back in time. You guys already seen the trades here on the chart. I'm gonna go back in time real quick. And a lot of people ended green today in the Discord server. So I really was glad seeing a lot of you guys making progress in your trading. That's exactly my point of making these YouTube videos, as well as the educational content for the private YouTube members, trying to get you guys profitable full time, all that. Anyway, start on the higher time frame like always. That's my number one rule for all of you guys. Even if you are experienced, I recommend it's a good practice nonetheless. Here is the 1 hour domain I was looking at. I also had a few things in mind, right? With the 1 hour, sell to buy, covered by these two wicks. Again, if you don't know what a sell to buy is, recommend maybe watching some of my videos. It should be within the first session of the course. But this is sell to buy here. Again, you can also mark this entire demand zone here, honestly, because if you look at the size of this, 0.50% on NQ is very small. This is not bad at all. So you can mark the entire zone, but I usually like to mark the initial mitigation, especially for high time frame PYs. Otherwise, sometimes they could get really big. In this case, it's okay. And another thing I had in mind, or was looking for, is that we took out pre-stay high. So this is something I was wary of, like when we take out liquidity like this, usually when we come back, you want to wait to see maybe if we get some type of liquidity sweep. It could be external or even an internal liquidity sweep. All right, and I'll go over that in just a bit here. But we took out pre-stay high, meaning we could low-key get maybe a manipulation move or two above that. So that's something I kept in mind here. I don't want to keep trading, right? Once you trade with the trend and it takes out liquidity like a weak high, you don't want to keep trading if it keeps going higher and higher like this, right? Because at some point, the trend's going to end, it's going to flip, take out liquidity, and then maybe continue. Or create a new internal trend here and then continue higher. So something to be aware of. Like, it's better to be longing down here than up here. But I was fine longing here just because of how extremely bullish we are. Look on the daily, absolute monster, right? I'd rather stay with the trend than try to go against the trend, if you know what I mean, right? Always try to follow the wave if you can. So what I saw here was the 1 hour, like I showed you guys. Here's the origin. Why? Because it's slow. This is the extreme PY that's unmitigated. That bro structure made this new high. Sometimes I don't have it marked manually perfectly here. As you can see, you can even mark this or this. Both are fine here. But essentially the indicator does it for me, and I usually get alerts, so it's not really a thing I need to do myself manually. But anyway, those were the two PYs, and then you can also do 50% tool if you like, something like this. And you're just waiting for market open. So market open around, I believe here, 9:30. So just wait for market open, and we tend to get a lot of volatility at market open. Now at market open, I noticed here is the range. Here's the main range. Here's the range of this current delivery. When you came back to 50%, we mitigated the only PY here. You see how in this leg here, this is the only PY in this leg. There's no PY above. Actually, I just realized there actually is a PY above. Okay, I did not realize that in live time, so that's my fault there. But anyway, we came back right to 50%, which is another rule I utilize. And again, you can take this if you want, but I think I just missed this trade here, honestly, because I was looking for this inversion here, right here. So if I mark this with this box here, this was the main thing I was looking at initially, this inversion. We never got this inversion, but if you want to take the OB entry model, you could have taken this and just a small L here. And the PY for this trade would be off. Let's see, be off this. Nope, not that. I think this is unmitigated here, just barely. As you can see, just barely unmitigated. Probably something like this is more obvious as your PY. So if you took that, that's okay. It's an okay loss to me, even though it didn't inverse the IFG. So that's just something you want to keep in mind. Again, if you took up pre-stay high, so you want to keep in mind, take up pre-stay high. You want to wait for a few maybe liquidity sweeps internally or externally to take your trade. But I was fine taking this origin here anyway. This origin even got swept, as you can see, as liquidity. So basically, I have my limit there for the OB entry model, and I think this failed. I could have went break even twice. So going back on my journal per se, I basically journal in the Discord server in the JTraders Execution channel. For those that paid for the ETU 100 course, you should see the channel in there called JTraders Execution. That's basically my journal at this point, because I've taken so many trades and it's just like a numbers game for me in this stage of my career. But I had two chances to go break even here, or when price broke above here. Two potential areas to break even on your trade here that I did not break even at, unfortunately. So I just took this fat L, and I don't know why I'm saying it's a fat L. It's only a -1. Here's the PY right below. As you can see, this is even better because not only do we have all this general liquidity, we have a liquidity sweep, tap into origin, we had an internal sweep here, and we had basically two sweeps here prior to our entry. So this is a lot of liquidity. It's very good for us. 1 hour demand. And I think my entry here was either off the IFG or OB entry model. I believe it was the OB retracement here. Yeah, right there. So that was my entry here. As you can see, literally little to no drawdown, not even 50% drawdown in my trade, and it just skyrockets. Again, I tell you guys this all the time, but whenever price takes out so much liquidity like this, you will see price tends to run past all those highs, these internal highs that it just made very quickly. So if you don't catch this trade, you're likely just going to miss it unless you catch it down here when you get the retracement, right? So price basically ran to my TP. It took a while for this trade to hit TP. Again, this was the trade where basically I wasn't really looking at the charts. I entered, and somewhere around here, I was really like so much momentum here, and I knew that we were coming into supply. As you can see, the indicator marks it here. I didn't see it initially myself with my eyes, but it did interact with supply, hence why this happened, for those who are wondering. And I think we kept it slow here too. So just barely there, and it basically went towards my TP, which is slightly above the high, because like I said, this is a weak high. I'm targeting the high here, and I like to juice out a little bit of my trade, usually for pro trend. Here's another example. Like for example, every time you see we take pro trend break structures, we tend to go a little bit past the high. Some sauce for you guys if you guys don't know. Usually 0 or 2 as the mode breaks. So you can see go past the high a little bit more. We even manipulate sometimes, go even further. That's very normal when we trade with the trend. Again, go way past the high here. Did not take out the high. Went a little bit past the high before we had a small retracement, but this is a fake out. So went way past the high, as you can see there. Way past this high, way past this high. So like when you're setting TPs for your pro trend, ideally you want to have your TP slightly above those highs. If you're bullish, if you're bearish, as in the pro trend is bearish externally, you want to obviously have it slightly below the lows. You can have it right at the high. I don't mind that. There's times where, yeah, you'll get like a 0 mode break, candle break, and it wicks the high and immediately goes back, complete reversal. Sometimes even taking out your entry price, but for the most part, most times it will go way past the high or low that's being made. So just from my backtesting data, that's what it shows, hence why I want to juice out a little bit of my trade. I mean, you can see, for example, if you want to do some math here, it's about like a 0.3 more. So this is me having my TP slightly above this high is basically equivalent to me taking a minus 0.7 off this loss here, doing basically nothing, just having my TP slightly more above the high because I'm trading high risk rewards. So each of these smaller increments add up. Like if I target the high at 6.6, it max went 7.3, almost additional 1R, right? That would have even covered this loss here. So that's how I think of my RR in terms of averages. This is again for people that are already profitable and just want to optimize their trading system in terms of their winners, keeping their winners as big as possible, catching majority of the move if you can. 75% of the move each time is ideal. You're not going to be a bottom top tick with 100% win rate, but you want to be able to catch majority of your winning trades. Again, I don't take partials, okay? Some people maybe that are new here may be wondering, am I partialing here, TP1, TP2? Definitely not, all right? I'm not a fan of partialing. I used to do that back in the day. Sure, you have a higher win rate because, this could have been like a partial loss or partial win even, but am I going to come out 6 risk reward by partial this trade and this trade? Because I can't cherry pick trades that I'm partialing, right? I'm going to partial both trades if I have a partial system. And this partialing, I might get like 3 risk reward. So let's say I get 4 with partialing here, and then partialing here, I mean, this didn't even run like 1-to-1, right? So maybe you get like, think about it this way, because if you're partialing 50%, let's say, which is what a lot of people do, 50% of 0.65, you're only getting plus 0.3 RR. So add up the total here, guys. I mean, 4.3 risk reward or 6 risk reward, what sounds more enticing to you? That is almost a 50% difference in your risk reward. net risk reward. So these things add up. The more trades you take, the more the smaller things, mistakes, whatever you want to call it, optimization tweaks, they add up over a long period of time, especially when you're compounding an account. So these are why I have these small tweaks in my system. I think you guys should all be aware of and keep in mind whenever you're trading next time. So just a pro tip there. If you miss this initial trade here, some of you guys might have missed this trade here. First off, you shouldn't have missed this trade because there's an initial IFG entry here that you could have taken, and your risk reward, if you just want to keep conservative, it's okay. You can still get a nice 3.7. There's nothing wrong with the 3.7 risk reward. My average risk reward is like a 3 to 4 R risk reward. It's just at times when I do get a nice aggressive entry with a very nice expansion move, when we have so much liquidity built up because we have all these fake outs, it means the range is going to be bigger. The more fake outs we have in a leg of structure, the bigger the range is. Think about it this way. If a delivery, let's say we're bearish, only had one fake out and then your entry, this is the size of range. But what if it had all these fake outs here? Sweep, sweep, sweep. Look how big your TP is from your entry. Your entry, stop loss. Look how much risk reward you can really get out of your TP. So you can literally make, even if you take 3 losses in a row. I think some of you guys are not understanding. Even if you take 3 losses in a row, this one massive 6, 7, 8, 9 risk reward, sometimes 12 risk reward for me, win is gonna erase all those losers. You just have to be patient. A lot of you guys are lacking patience also, and this comes with trading psychology, experience. I can't teach patience. This is something that's purely discipline. This is on you to work with internally in here. All right. So this is 7 risk reward trade here. If you want to know how break even, internal break structure, or to 50% TP, and then last but not least, also, if you miss this trade here and you still want to catch it, boom. And depending on how this all depends on how you mark 50% here. All right. So you could have caught it here. If you took this entry here, this would have been your continuation entry. My OB continuation model. You could have got an even better risk reward than me, actually, 8.6 here. Again, it's not always about entering at the exact bottom of the market. Sometimes you will find that internal continuations, you will get high risk reward. Okay? You just will. And it is what it is. It's because just because you enter at the very beginning of a trend doesn't mean that beginning candle or spike or mitigation is going to be a small stop loss. That's the main thing. It's not necessarily always about the distance. Remember, you want to keep things and understand things proportionally. It's all relative, right? If your stop loss is very small and your TP is not as far as your initial entry at the very bottom, but your stop loss is 2 to 3 times smaller, you're going to double or triple your risk reward. So that's basically what happens here. Like, for example, situations like this, when you have just a big mitigation candle, this just means within the seconds time frame, this just shot up very quickly. So if you go to seconds, like if I show you guys real quick, if it loads, yeah, it does load. I can see it. As soon as it mitigates, it was like an impulse delivery essentially. I'm not talking about impulse here, by the way, guys. I'm just talking about it just delivered with a lot of momentum here. Instead of chopping around, instead of doing this and then delivering, it just immediately shot up. As soon as it mitigated this 1 hour PY. This is how accurate the stuff I teach you guys is, man. It just works like a charm. I'm telling you, this is how you develop an edge and become profitable in the markets. I have not switched my system. Basically, ever since I found out about how the market moves this way, I have not changed my system. I've only added small little tweaks, but in terms of how I mark PYs, entry models, I have not really changed much. The foundation of my system has stayed the same because I haven't found anything that works better. If I find something that works better, sure, I'll change it. But until then, this is really perfect. Perfect for my personality, perfect for everything. 60% win rate, 3 to 4 risk reward average, and it's a good frequency too. I'm not a guy that likes to take swing trades that are once or twice or 3 times a month. I like to take trades almost every single day. And this system basically gives you or guarantees you trade basically every single day, depending if you want to take A setups or A plus only. So yeah, this would have been your internal OB continuation. You're trading my continuation model here to the upside. Again, we're not here trying to short this, right? Even though there's supply here because we're bullish. However, as you can see, this is an example where you could take a loss. So for those that trade the stop runner, this internal low made that new internal high. This is a potential loss. So realistically, if you were trading stop runner, if you're not, then this doesn't apply to you. This would be -1 here, right? and then you get an 8 risk reward here. So you can see how being patient pays in the long run, because look, -1, 8, you made 7 risk reward. You made 7 times your initial risk. That's insane. I don't think people realize how much that is in a single day. If you made that every single day, 7 risk reward every single day, it's not gonna take you long to get 6+ figures in payouts. Not only that, but ultimately grow your personal account, man. But I think that's basically it I have to cover in today's video. I'm gonna cover these trades later, next time I record. But one last thing I did want to cover, like for example, just to help you guys understand time frames factually better, is how I see this break, us trading this expansion move on a lower time frame, going for this break here externally, is the same as the 30-minute traders looking for this reversal here, but waiting for the manipulation move. So the 30-minute traders probably see it's IVG, whatever, they probably skip off on this, right? They're waiting for this manipulation above this high, and then they short here. Hence why you can see by just playing out price later, price ultimately does give you that nice short, as you can see. Again, you're not always going to be able to top tick the market every single time, but you can still catch a very nice trade. Like for example, if you're taking this short here on the 1 minute, which is what I trade off of, I mean, you can get some, this is a really good trade. If you want to, we'll go over this real quick before I end today's video. Since you guys have been requesting me to add more, I guess, miscellaneous stuff to the videos, not just showing my setups I took, but also potential other setups. Like look, OB instrumental, mitigation there, cover at a high. I mean, there's not much to explain. Here's the origin. It's 11 risk reward, guys. If you took an L here, that's only -2. Too many guys are stressing over these two losses. Also, these are counter trend losses, so you should be mad at yourself that you're even executing counter trend trades. Like, yes, it worked out here. Okay, this isn't a loss actually, but this, for example, or these are counter trend losses. You should be getting mad at yourself, because it's on you that you're taking these losses. It's not because the market, it's not because the strategy, it's because you're being impatient. You're not being patient enough to wait for the high to get taken and then take the entry. Because that's what you do when you're counter trending a bullish market. You wait for highs to get taken and then you take your entry. There's your 11 risk reward. So I mean, this could have been almost a 20 risk reward day for me if I took the short here, but too late in the day for me personally. Again, this literally hit TP while I was outside just walking. I'm not sitting here on the chart all day, guys, especially when I'm seeing a big target like this. I'm just letting it run. Otherwise, here's a problem. If you keep staring at the chart and looking at your trade, I bet you maybe like 50% of people, I'd say it depends on how much backtesting experience you have, but if you've done a lot of backtesting, you have a lot of confidence inside yourself. Just stick to your system because you see your trade setups and draw liquidity play out over and over again. You probably don't have to worry about this, but people that lack backtesting or screen timer experience and confidence, when you see the market chop around like this, you probably will mainly close your trade. So you probably will literally cut your winner in half, more than half, or you just cut it here too. That's not good. All right, it's not good. You guys stick to your plan, stick to what you backtest, stick to what you've seen play out over and over. The market does the same thing every single day, guys. It may deliver slightly differently, but it's doing the exact same thing. It's doing the exact same thing. Conditions will change. Price is going to shift from bearish to bullish at times. But in terms of how price delivers, in terms of patterns, it stays the same. Okay? Ignore all the people telling you, people made money. I know a lot of people made money during COVID, but that's more so just really shorting every single day. All right, this is a different type of market. We're trading all-time highs. It's actually the flip of COVID, essentially. You should be buying with the trend and knowing when to sell. Not sell here, but sell here after you take out the high. Wait for this. Be patient. The reason why market does this consolidation is making people that are impatient lose money. Impatient people are shorting, hitting stop loss. There's probably so many people hitting stop loss here. And this is why people get frustrated with trading that are inexperienced, because you see how many losses you take, you give up on shorting, and then boom, as soon as we take out the high, you're maybe 4 or 5 losses deep shorting, and there's the massive winner you've been looking for this whole time back down here. So be patient, guys, when you're trading. It's a skill you have to master, and it's something you have to deal with yourself every single day whenever you're trading. This is the thing that doesn't really change, or that changes every day. Your emotions change very frequently, but your system should stay intact and solidified and should stay fairly similar. I think that's basically it that I have to go over today. In today's video, hope you guys did enjoy. Leave a like, comment, subscribe if you want to see more of these free trade recaps on my YouTube channel. Let me know if you guys want to see other types of content. I'm not going to really do day in life stuff on my YouTube channel. I decided to keep this just fully educational, me and the charts, just sitting here talking to you guys, streaming, whatever. So yeah, click the link down below if you are interested in learning from me, and I'll catch you guys in the next video. Peace.